We are live.
Welcome, folks. Thank you for attending our June finance meeting. Clerk, you take the roll call, please.
Through the chair, roll call has been taken.
Thank you very much. Members of committee, any declarations of conflicts of interest to express before we get started? I see none. Let me ask members if there are any items you care to separate for discussion or question other than 5.2.1 for which we have a delegation. Councillor Sullivan.
Thank you, Chair. Yes, 5.2.2, please.
Let me get a mover and seconder for everything that's on the agenda today. Councillor Sullivan, Councillor Caputo, thank you. We'll go ahead and vote on everything that was not separated now. Yeah, if you would read that out one, thank you.
Through the chair, the items that are subject to the vote are the following: 523, resolution from special in-camera city council meeting held on April 30th, 2024. Item 524, financing for Southwest Community Center and Park project. Item 531, quarterly reserve and reserve fund update. 532, treasurer's annual report on lease financing agreements. 533, treasurer's investment report for 2023. 534, minutes. Councillor Sullivan, if I can please have your vote. Thank you. The motion carries on a recorded vote of 4-0. Those councillors voting in favor: Councillors Ventelport, McCreary, Caputo, and Sullivan.
And thank you for that, folks. Now, we do have a presentation or delegation today, and we're happy to receive our two friends from Millards, Jennifer and Whitney. Would you like to come to the presenter's desk there? You know how the machine works, Jennifer. You have 10 minutes inclusive of questions, and when you're ready, just get started, please.
Good afternoon, everyone. So today we're going to start by going through our draft report to the committee, which outlines various matters which we feel should be brought to your attention. Looking at the first section, the audit scope and responsibility. This part includes our anticipated auditor's report. The document outlines that we have audited the financial statements of the Corporation of the City of Brantford, which comprises the consolidated statement of financial position at December 31st, 2023, the consolidated statement of operations as well as the changes in net financial assets, remeasurement gains and losses, and the cash flows for the year then ended. Our opinion is that the financial statements present fairly in all material aspects the financial position of the city at December 31st, 2023, in accordance with Canadian public sector accounting standards. The report continues on to outline management's responsibilities, as well as those charged with governance. Management is responsible for the preparation and fair presentation of the consolidated financial statements in accordance with Canadian public sector accounting standards, as well as the assessment of the abilities to continue as a going concern. Those charged with governance are responsible for overseeing the city's financial reporting process. The next part of our auditor's report outlines the auditor's responsibilities, and our objective is to maintain reasonable assurance that the statements as a whole are free from material misstatement. As part of the audit, in doing so with Canadian auditing standards, we identify and assess the risks of material misstatement. We obtain an understanding of internal controls relevant to the audit. We evaluate the appropriateness of the accounting policies used. We evaluate the overall presentation of the financial statements, the structure and content, and we obtain sufficient appropriate evidence regarding the financial information of the entities or business activities within the group. We would like to confirm at our time the independence from the city and our compliance with provincial and professional independence requirements. The next section further outlines comments on management's responsibilities, which I've already gone over earlier, and we will obtain written representation at the conclusion of the audit. Other items we wanted to touch base on you with through this report was just some of the accounting standards that were adopted this year. specifically PS 3280, which described the asset retirement obligations, as well as 3450, which is financial instruments. Both standards, when adopted during the year, resulted in some transitional provisions, as well as adjustments to the statements, which we will go over shortly when we present the financial statements. We just would like to let you know materiality remained unchanged during the audit, and there was no misstatements we would need to bring to your attention or deficiencies in internal controls. We would just like to thank staff for their excellent cooperation throughout the entire audit process. Finally, we would just like to note a few standards that are coming into effect effective April 1st, 2023. So that would include the standard 3400, which deals with revenue. It'll be effective again for fiscal years beginning on or after April 1st, 2023. And we'll work with management to evaluate any impacts this would have on the statements. And I'll turn it over to Jen now to go over the financial statements.
Thank you, Whitney. Good afternoon. I'll provide a brief overview of the consolidated financial statements. So as noted in the auditor's report, the financial statements are prepared in accordance with Canadian Public Sector Accounting Standards, or PSAB. The consolidated financial statements of the city include the operations of the city and the local housing corporation, the downtown BIA, the municipal nonprofit housing corporation, the police services board, and the public library. John Noble Homes also consolidated on a proportionate basis, and it's based on the population of the city of Brantford in proportion to the entire population of the city and the county combined. Grandbridge Corporation is also included in the consolidated financial statements on a modified equity basis. This means that Grandbridge's accounting principles are not adjusted to conform with those of the city, and interorganizational transactions and balances aren't eliminated. Grandbridge issues separate financial statements prepared in accordance with international financial reporting standards, and they're audited by a separate auditor. On the consolidated statement of financial position, so the first page of the financial statements, the financial assets of the city include cash, receivables, land held for sale, investments, and the city's investment in Grandbridge Energy Corporation. In the investments, we see the impact of the new accounting policy that Whitney was referencing, adopted in 2023. So as described in note 7, a certain portion of the investment portfolio of the city is now designated to the fair value category. So this means that the unrealized loss on the city's investments designated as fair value is now reflected in the surplus section down at the bottom of the page in the accumulated remeasurement losses of approximately 1 million at the end of December 31st, 2023. In addition, I just wanted to highlight that the investment in Grandbridge Energy Corporation represents a 41% interest of the overall equity of the corporation. The liabilities include standard amounts such as accounts payable and accrued liabilities, along with the long-term liabilities. In the asset retirement obligations line, you see the impact of the other new accounting policy that you were required to adopt in 2023. So asset retirement obligations, or AROs, address the reporting of legal obligations associated with the retirement of tangible capital assets that are owned by the city. So in the city's case, this includes new liabilities recognized related to asbestos removal and fuel tanks, and also liabilities you previously recognized related to landfill closure and post-closure. These amounts were previously presented in accordance with another PSAB section and are now required to be reported for in accordance with asset retirement obligations. It's important to highlight there's estimates involved in the initial recognition of asset retirement obligations, and these include the retirement obligation cost itself, the useful life of the underlying tangible capital asset, inflation rates, and interest rates used for discounting. In subsequent years, revision to any of these amounts can cause a change in the recognized asset retirement obligation. And going forward, you will see the recognition of accretion expense for the passage of time, which effectively represents discounting. It's important to keep this in mind, and also other liabilities that involve the use of estimates such as post-employment and retirement benefits, which are determined by actuarial valuation, and the contaminated sites liability, which is determined based on expected remediation costs of contaminated sites. The contaminated sites differ from asset retirement obligations as they don't result from the acquisition or normal use of a tangible capital asset. At the end of 2023, the city has net financial assets of approximately 271 million, up from approximately 252 million at the end of 22. Non-financial assets include tangible capital assets, which represent the city's expenditures on assets like land, buildings and machinery, equipment, infrastructure, and assets under construction, less accumulated amortization taken to date. On the consolidated statement of operations, revenues include taxation, user fees and service charges, transfers from the federal and provincial governments, and other revenue sources. The expenses, consistent with prior years, are presented by functional area. However, in Schedule 2 to the financial statements, the segmented information is provided so you can see the composition of the expenses in these functional areas. I'd also like to draw attention to the budget column. The budget is presented in accordance with PSAB, and as a result, it's been converted from the original balanced budget to a PSAB compliant budget, and details around that conversion are provided in Note 27. And overall, the city had an annual surplus from operations in the year of approximately 52.6 million versus 86 million in 22. The consolidated statements also include a new statement this year, the statement of remeasurement gains and losses, and it provides you with details regarding the unrealized gains and losses on city-held investments carried at fair value. The accompanying notes are an important component of the financial statements and provide disclosures regarding significant accounting policies and additional details related to amounts presented in the financial statements. Significant changes this year include Note 2, which presents the impact of the adoption of new accounting standards related to financial instruments and asset retirement obligations, and Note 10, which describes the AROs recognized by the city as the result of the adoption of the new standard. So again, we'd like to express our thanks to the city and its staff for their cooperation as part of the audit. Thank you.
Thank you very much, folks, for making the presentation. We have just about run out of time. But if if committee members wish, we could ask the two folks from Millards to stand by and receive questions during when the time for this is on the floor, if that's the wish of committee. I don't see anybody moving or seconding, so stay if you wish. Thank you very much. This is now on the floor for discussion. Speakers to 5.2.1. Well, I have a number of questions until members of committee find their way here. Taxes receivable, note number 5, staff. We have 14,761 versus 11 this year. I wonder if you could indicate what the reason for the discrepancy in those numbers is.
To you, Chair McCurry, that number is net of allowance, and we did reduce our allowance significantly. That was something that was discussed when the preliminary report came forward in April, because there has not been a reassessment cycle for so long, and the appeals have been pretty much exhausted until the new assessment cycle begins. We did do a large reduction in our allowance.
Sorry. Asset retirement obligations, we have 6.1 million in asbestos removal. We've carried that number for quite a while, have we not?
I believe, and I might have to get Millards to jump in here, but this specific requirement to report this number in our financial statements is new for this year. So this isn't something that's previously been reported in this forum before, but the city has undertaken certain studies in the past, and we are relying on that information to be able to fulfill this reporting requirement.
So is the number for information purposes, or are we actually going to perform this work?
It's ultimately what our obligation would be if these the facilities where this exists were to be torn down or modified or renovated in any way that would disrupt what is there.
Okay. Sorry, I'm just trying to scroll through here. So with respect to item 23, note 23, taxation, it it would appear that we've brought in 8 million more in taxes, which seems to be at odds with the number that we looked at just a bit earlier. So municipal and school property, 222 versus 214. Could you explain the difference between that and the earlier number?
To Chair McCurry, I'm not really sure what's being asked here. So that's the total on note 23, tax revenue applicable for municipal
Mhm.
purposes, 189 million, is the number that flows through to the city's consolidated statement of operations.
So we have but here it appears as though we have an additional 8 million that we took in from taxes. But if you go back to the note 5, there seems to be more of a $3 million difference year over year.
That's, sorry, I understand now.
Yeah.
That isn't the revenue.
Yeah.
That is the amount that is currently not collected.
Okay, yeah, gotcha. Thank you. And my final question is, do we have our year-end operating statement available yet?
Our final year end
Yeah,
operating, so not PSAB base,
Correct,
our
yes.
year end is the next item on the agenda.
yeah, okay, thank you very much. Members of the committee, anything further? Then we will go to the question.
Item 521 carries on a recorded vote of 5-0. Those councillors voting in favor, Councillors Ventelbourg, Carpenter, McCreary, Caputo, and Sullivan.
Councillor Sullivan, you have the floor if you'd like to lead off with 5.2.2, please.
Thank you, Chair. Actually, I only wanted this separated so that I could actually applaud staff and working to what they knew what council wanted to see with this surplus. And the fact that we're going to be able to put $2.6 million into the hospital reserve. I think that's a good chunk of money to go in there. And I just want to applaud Joelle and her team for doing what she knew council wanted. Thank you.
Now, did you mean you're going to applaud literally, Councillor? Excellent, thank you. Anything further on this item? We shall go to the question then.
Item 522 carries on a recorded vote of 5-0. Those councillors voting in favor, Councillors Ventelbourg, Carpenter, McCreary, Caputo, and Sullivan.
Everyone, thanks for attending today. That concludes